Welcome to another episode of ZK Idea Maze, a podcast where we discuss applications built with advanced cryptography such as zero-knowledge proofs, secure multi-party computation, and trusted execution environments. This time, we look at ZKTLS in the context of DeFi. We talk about two different lending products, 3Chain and Earnifi. If you enjoyed this podcast, please share it with your friends. It helps us reach more people, and subscribe to this channel if you haven't already. Now let's dive into the episode. You get this verifiability with ZKTLS, like as we previously talked in various different contexts, right? You have all these siloed Web2 databases, and they have all the information, especially about users' identity. Like it's very easy to see in case of social networks, but then also financial institutions, credit score agencies, that data is not public. And even if it's public, it's not verifiable. But then if you make it available through an API, ZKTLS can make it verifiable. And I think that opens up the space of building DeFi protocols based on credit score. Historically, almost all the lending in DeFi, I believe, is over-collateralized lending. Like if you were to borrow like $100, you probably have to collateralize like $150 or something. And usually that use case is okay, but then lending doesn't really work like that in your day-to-day life, right? If you want to open a business like a restaurant or something, you probably don't have any money or you don't have enough capital to get that business started. So you go to a bank and they probably judge your credit worthiness and they extend you a line of credit, right? So under collateralized lending based on your credit worthiness, I think that's really an interesting area of opportunity for DeFi to tackle. But then at the same time, like on blockchains, you can create as many wallets as you need, right? There's no anybody's identity is not tied to the wallet. So it's really hard to it's not really clear how would you tackle that problem? How would you determine the credit worthiness of an account, of a wallet, and extend them loans accordingly? So I think that's where maybe ZKTLS can bring a lot of credit scoring and credit history of the borrower and make it available on chain. I think that's like a nice design space that we are seeing here with 3J. What's your impression of 3J so far?
Yeah, I mean, good. I would say that's like setting the stage of maybe why under collateralized lending would be desirable and maybe how that exists in the current state. Is it's not expected for any person when they're opening a new business to be whole, right? Or if you take, for example, the process of purchasing a home and then having a mortgage, most people aren't buying a home in cash. Maybe just like illustrating first the comparison with what exists today as far as financial markets largely and how under collateralized lending is like a key piece of it. Just setting the stage again if someone hadn't or isn't familiar with it. Essentially, ZKTLS allows you to prove arbitrary Web2 data. This can be authenticated, unauthenticated data, and it can be done so in a privacy-preserving way. Given the topic of this is largely financial applications that we'll talk about between 3Chain and Earnifi, the example that a lot of people reference with ZKTLS is I want to prove to you how much money I have in my bank account without showing it, and essentially that you can get like verified income in that case, or not verified income, but maybe potentially verified reserves. In the case of Earnifi, it's relevant to have verified income as well as for under collateralized lending. So I think that's relatively the space that we're working within. And ZKTLS is a tool that allows you to be able to prove any TLS sort of session what data is actually being sent over that, and you can do so in a privacy preserving manner
we call
Yeah,
it ZKTLS, and oftentimes, like half the times, there's no privacy, so it's a
yeah,
bit misleading. Maybe maybe web proofs are better name, but yeah, I mean,
yeah,
okay, I don't care that much about name, but like, yeah, I just don't want to misguide people
for
that
sure.
something is privacy preserving if it's not, you know. So
That's a
it's
good
yeah,
point. I think that also maybe it's probably more apt for web proof than ZKTLS. ZKTLS also is a bit more, it's too technical. I don't talk about TLS session when I log into a bank account or any other website. So it feels like it's exposing too much of the magic under the hood. But
yeah,
ZKTLS right now is largely what people describe it, but web proofs I think, is more apt for the design space. I guess the privacy preserving aspect of it maybe is referring to some of the selective disclosure. Essentially, I can
right.
reveal only parts of the data that was sent to me, like just the bank balance, and that it is actually my bank account and not every entry maybe within my bank account.
If I'm a borrower in one of these protocols, it would be great if I don't leak all my details, like how much money I have in my bank account or what my address is and what my credit score is. Like it would be ideal if all of that data could be hidden and I am able to generate a proof that like certain range check passes locally on my browser or something like that. And then and then hand off that proof to like a server, and then they could calculate like what's the interest rate I should be given based on whatever the risk profile is, right? It's great to have that privacy.
Hmm. Yeah, I guess privacy also in this case isn't purely personal preference. It also can be avoiding risk as far as overextending where you share copies of data that potentially could be in a vulnerable state. So financial information is can have a pretty like strong impact if other people were to find out about it, at least within the US. If you have financial information and you have a bank account, they probably have your social security number. And that's not necessarily something that you want to be advertising on the internet. Uh, and you'd like to do maybe the best that you can to try to reduce the surface area of it. So an interesting characteristic of ZKTLS that I think is unique is this fact of like reusing the same data versus making copies. It's like encoding versus, passing by reference instead of passing by value.
Mhm.
So I like that as a general concept is that it maybe allows you to reduce the surface area of data that can potentially have like financial harm to you. Like we always see, maybe that's a little pessimistic, but we have seen very frequent personal information getting leaked and then people having ramifications for it. You would hope that when you have your information stored on some server, they're doing best practices. And even if they are doing best practices, it doesn't mean that it's actually guaranteed. And ZKTLS isn't a silver bullet for that either. It potentially is one way to help mitigate the overall space as far as where you're sharing your information. But
I wonder where is the scope of regulation here, because I noticed that 3J only serves in the US, I believe. And but like ideally, like if it's a lending protocol, you would imagine it's a cross-border protocol, right?
mhm,
Ethereum doesn't care where you live and which jurisdiction decides your regulation. So, and also like I believe they mentioned like the under-collateralized lending market worldwide is like $5.3 trillion, and in US it's like $1.3 trillion. So like obviously the market is too big, right? And yeah, and how would you like? Yeah, this is not clear to me. Like if you so you have to enforce these privacy measures at the protocol layer. You cannot just rely on regulations, to keep the lending system,
mhm.
stopping them from leaking information of lenders and borrowers.
Yeah, I'm not sure as far as what the jurisdiction is, as far as who can actually participate, but that's maybe an interesting segue into DeFi. And like, I guess the flip side is, how would you describe or consider the differences in DeFi versus what people like? What, yeah, when we're saying DeFi, most people probably just think like, yeah, TradFi, yeah, versus like what people think
Yeah.
as far as financial. It's not TradFi, it's just like this is the standard for people, right? And they don't know that this other side
Right.
exists. How do you maybe introduce what are some of the benefits or the differences maybe between them when you brought up like something like I think maybe you mentioned an Aave or Uniswap of the world.
Yeah, it's interesting, first of all, that like the word DeFi probably didn't exist like 5 or 6 years ago. And now it seems like pretty obvious when somebody says DeFi. It's like a common word. It's not just like a word among crypto people. I think if you say DeFi to a cab driver or someone like, I'm pretty sure like they'll understand like, no, what do you mean? Like, I think it has a certain level of awareness at this point.
Maybe
But
we should do maybe a survey next
maybe we should do a
cab
survey.
ride. I'd be curious to see how many people maybe you interact with. Just see what the reaction is when they hear that word, and you can probably tell whether or not it's recognized.
Yeah, but like I think DeFi was probably the first applications of blockchains that actually started being used in the wild, right? I believe it was 2020 or like sometime around COVID when things were already pretty volatile. And I think that's where Uniswap started to become something of an app that people started using. I think that's like a automated market maker. I believe in terms of lending, compounds where they can match between the lenders and borrowers, and the lenders could get whatever yield they want. And I believe like in those days the yields were wild, but promised them to give like 20% sometimes. And some of those projects turned out to be like a lot of those projects turned out to be disastrous. Like I don't know if you remember Terra Luna and it's collapsed. I think that was like disastrous in 2022. And I think that they were promising the 20% yield throughout, and that didn't end up well. And yeah, I'm always curious. Like whenever somebody says like something like more than 15% or something, it's like some kind of alarm bell rings in my head, like where this yield is coming from, and I'm always like uncertain about these things.
Yeah.
But like from what I remember from those days, now here we are talking about under collateralized loans and loans for something productive, right? Loans for your personal expenditure or loans for starting a business, something which sounds very productive. Whereas lending of those days, like lending on Compound or Aave and lending through the over collateralized protocols, I think it's almost always for speculation or like executing some sophisticated strategy, or in the worst case could be scam or something. I think through the years, I think this is pretty interesting that like we finally have like some kind of tools to implement a protocol which can give liquidity to someone based on their credit score rather than making them lock equivalent amount of assets.
Hmm.
I don't know if it answers your question about like DeFi and TradFi in general. I believe all these primitives are about democratizing the financial system. People in the US have access to sophisticated banking, but that's not the case in most developing countries, right? Many people there don't have bank accounts or their currency is not stable, but they do have access to smartphones and the internet. Although it seems like with DeFi we are just speedrunning the current financial system, minus the privacy, that doesn't sound impressive. But I would argue that it is just this skeuomorphic product development phase, as it happens with so many new technologies. Leveling the playing field in terms of financial inclusion is already a big deal, but also once we have speed run the financial system, we may see something totally new in DeFi, which is not possible in traditional financial systems.
Yeah, I agree. I think cross-border, or rather that concept of like people describe permissionless systems, right? That means anyone can participate, essentially, if you have an internet connection. I'd be curious to hear some people's reactions to the DeFi was the first useful use case for blockchain. I think pizza had been bought with Bitcoin. No, I mean, being able to do peer-to-peer payments on Bitcoin is like kind of what kicked, I mean, it's really what kicked all of this off. Then it's a different question of adoption as far as what you're able to exchange value that you've had digitally through a network like Bitcoin or Ethereum. Then on the Ethereum side, as far as the impact of DeFi, it's probably a large catalyst and now a fundamental part that you would expect in a blockchain ecosystem. And as far as the differences go that you're touching on, I do think a lot of these primitives exist in traditional finance, through banks or other regulated organizations, essentially. But also to your point, it doesn't necessarily mean everything that exists within the US is accessible to anyone else in the world, whether that is a simple thing like a loan, or I guess you would group stablecoins as well. I think in DeFi it kind of it gets into the market structure of anyone can participate. Maybe it's like an underlying part of a DeFi market.
I see medium of exchange as a different category. So yes, somebody bought the pizza for 10,000 BTC or something like that, right? That's a good example of commerce with crypto on the internet. I think in the 2014 to 2016 era, there were many attempts at using Bitcoin as a medium of exchange, but it never really worked right. I think maybe lending and borrowing is somewhat of a different category than just purchasing goods using crypto.
Sure. Yeah, I think that is fair categorization between them, and maybe using, even if some of these systems do exist, let's say within traditional finance, I guess like the benefit with some of these is that you also just have a free market structure as far as anyone can participate. And that's what, for example, Uniswap, that I can get, essentially this idea is that I can get a fair market value for assets that I want to trade. That's like relatively what it offers. And the way that is enforced is that the incentive is that if there is an opportunity for arbitrage, anyone now can actually take that and make the market whole, or to the market value. Whatever that actually means is that what people are willing to pay for another asset. So all of that, maybe to contrast, maybe who might be participating is now it's anyone versus just those that historically have, are like financial institutions rather than individual. If they want to write a service on their laptop, they can also play a part of this game, as well as those internationally can get access to other means of exchange. I think also that I would group that in there lightly, is I think it blends between the stablecoin example, is that, have highly inflationary currencies, you don't want to hold on to it, but you would like to have like some sort of, store of value, not touching on like the Bitcoin or Ethereum discussion of store of value, more so like I want a stable coin that is less inflationary. And like a lot of people will use exposure to the US dollar through USDC essentially as a way to do that. This general concept around collateralization, say, and then maybe we can go into like 3Jane and like Earnifi and just like briefly touch on, I think, maybe some of it just like the end user, like why does someone want one of these? I think like Earnifi is like a pretty clear one. Yeah. As we discussed earlier, there's maybe limited information that we can go through the docs to actually confirm and back up. But the general premise essentially is it does like payday loans, where a payday loan is that I don't have the money now, but I'll be good for it because I have reoccurring income from an employer. Could I get a loan and just like front me? And hopefully it's not like a predatory loan where the percentage is really high. It should be like a lower interest loan that I can get access to, and maybe it's a smaller loan rather than a loan that you take out when you want to do a mortgage. It's like things that I need to do to pay my bills, my rent. And what Earnifi enables is that my understanding, my guess is what it's doing. I have the app. I guess I haven't actually gotten a payday loan myself, but the premise of it is that you can prove your bank balance, I think more so your transaction history or form of income, and you can just like prove that I am getting paid X amount of dollars, bi-weekly. I don't have the money now, but I'll be good for it because I'm employed currently by this person and have recurring income. Can you front me that money? So that's like a really interesting, just general use case that if you were to go on the App Store and download it, you wouldn't have any idea that it's crypto, but that's what's powering it under the hood.
Without ZKTLS, if you were to build such an app, and I believe there are a few that exist today, but then you would have to share your credentials to your bank account or your account at the payroll provider, which is obviously not very hygienic. I assume people, even those who are in the dire need of payday loans, may not feel safe sharing their credentials. ZKTLS, in this case, improves the workflow that already exists today. Also, employers who want to help their employees get access to these short-term loans may not be willing to share their company data with third-party lending platforms. I don't know. So selective disclosure solves a lot of that.
Yeah, that's a really good point. Yeah, that's like a general interesting use case for ZKTLS as a whole. I think that gets into the earlier point that we were discussing on reducing the surface area of where your information goes or who has information. I think a lot of the topics related to crypto broadly are a bit abstract, I would say, as far as when someone says, who do you trust, or as far as your information, that is really abstract because maybe coming particularly from US where our systems work pretty well as far as like for the most part compared to general world like opportunity as far as online information and like financial accessibility through digital services, pretty great. And like these like concepts of the like trust in third party service, you don't necessarily feel it until something necessarily goes wrong. I think that's a big, maybe push, not back, but maybe generally headwind against like privacy as a concept in the broader population. I don't know how many people in the US, there's obviously a very strong group of people that are very passionate about that. But general population, as far as what privacy adds to a day-to-day interaction, like, a lot of people use Venmo and can send a transaction. I'll just like swap it private, and it's private between you, who you're sending data to, and Venmo, essentially. So they have the information. The other person has the information, and like for most people, that's probably good enough.
A permissionless lending protocol opens the door for this long tail of liquidity. It may attract many more lenders who will then compete for the borrowers, and hence the borrowers may get a loan at a cheaper rate compared to what they could get otherwise. In the case of payday loans, it's quite important because these loans are notorious for high interest rates, right? Sometimes could be as high as 1,000% per annum or something.
That's excellent point. That is hopefully I'll be curious to see what their design actually looks like. But that would be a big benefit of using some sort of like permissionless system, is now you have people that have varying amounts of risk tolerance who now can fill that loan request. And what that hopefully does is it in aggregate increases like capital efficiency, or like, I don't know if that's the correct term, but maybe financial access is an abstract concept, but something along those lines is getting fulfilled when you have a market structure where people can choose the risk tolerance and then hopefully fulfill the needs of someone else within the market.
Looking at the 3Gen white paper, is that they use credit history and credit scores to create a risk profile. So if you want to apply for a loan on their protocol, they will classify how safe it is to give a loan to you. Based on that, they come up with interest rate that is appropriate for that risk profile. And I think a DAO decides how much interest rate should be given to the person with that risk profile. And they can change that based on some DAO voting proposal, I assume. Then you need to mitigate the risk extensively at the protocol layer too. What if the borrower doesn't pay back? How will the protocol return the money back to the lender? Who will take the losses? And all those questions are important for designing such a protocol, right? With Earnifi, it is a bit different because they are specifically going after the short duration payday loan industry.
Yeah, there is, depending on the loan use case and the size of the amount of loan, definitely should change the risk profile as well as the data that you need to back it up to make that hopefully an eligible or filled request. I guess there's like two aspects that we're kind of touching on with like broadly 3Gen. I feel like this would maybe do it high level justice, is that it allows on the borrower side, you can prove your financial assets across various sources, bank balances, I believe like investment opportunity, Plaid, Credit Karma were some of the core ones that were referenced as far as, so you can access all your banking information, your credit history, and then essentially on and off chain. So essentially, like, let's say the totality maybe of financial history, and then you have a better complete understanding of the like liquidity or ability to actually fulfill their requests essentially, or will they be whole in the future? I think there's like two aspects that we've maybe touched on that with Earnifi and 3Gen that are interesting as far as characteristics of like verifiability, which is this weird abstract concept, is that with Earnifi, you now actually like you can build up some sort of like reputation as far as, hey, I'm getting paid at a consistent frequency, and now hopefully get better access to the loan structure. I think the aspect on 3Gen that's interesting is this idea of like aggregation. I think that is kind of getting back to maybe making the data interoperable as far as like actually getting to leverage all of the different data points that you have created and not have them within one place. The whole like data silo concept, ZKTLS, is an excellent example of a technology that allows you to break beyond that, and also highlights on the flip side how useful it is once you have like broadly aggregated information or data essentially. Now, rather than it's essentially the sum is greater than its parts. Now you can have a complete understanding relatively of the financial history as far as a individual might go and have a more effective or realistic loan opportunity, or rather like a risk profile. So yeah, these are like both interesting use cases as highlighting different parts of, I think, ZKTLS or verifiability more broadly.
I think verifiability is an underrated term. It enables unique user experiences like payday loans with fair interest rates and under-collateralized lending, for example. It is what underpins all these products or protocols, right? There are various different ways to get verifiability. For instance, blockchains give verifiability by replicating the computation. Zero-knowledge proofs give verifiability through a protocol that involves a prover and the verifier and some advanced algebra and cryptography. DEEs give verifiability by extending the assembly instruction set of a CPU, and some basic cryptography. Unlike blockchain data, which is verifiable and internally consistent, Web2 databases are not verifiable, and ZKTLS almost creates this verifiable layer over the unverifiable private databases, which is why I find it so interesting. It creates a whole new design space. ZK coprocessors, similarly, is I think another avenue. I think 3chain is using ZK coprocessors to get historical blockchain data, which is already available in the archive blockchain nodes, such as tokens held at a certain point in time, but then since sold, and they feed this data to the risk assessment algorithm.
Agreed. Yeah, it's a very underrated term, but also equally vague, I think, because verifiability brings with it different characteristics depending on the use case that you're using it for. As far as there could be this idea of like verifiability, it doesn't matter actually that, let's say taking the Earnifi example, if this is how it works and it is, let's say, improving a Chase bank balance, the subset of verifiability is almost like authenticity or kind of like provenance that's kind of getting packaged, aka Chase, who is holding your money for you, says that this is the correct balance, right? So you can get this provenance as far as it's from this API, which is owned by Chase, and therefore I trust with high confidence that they actually have the money. So I think that it's really hard to understand verifiability unless you have a particular use case that it's applied to or articulated, because oftentimes the benefits of like verifiability, it is less of a forward promise rather than like after the fact I did something and now I want to show someone else it. So I think that that is something that can be tough to maybe wrap people's heads around, like the term that like Shriram has been terming with some of these applications that have verifiability is more the term of like commitment. So there's like two sides to it as far as like commitment, as far as the verifiability sometimes can feel almost like an after the fact check rather than an application with a commitment, like the example maybe of Uniswap that I can, gives you the commitment that I will have the fair market value for two assets or for an asset. And it's more proactive rather than retroactive as far as verifiability. So all that to say, I think that there are like different ways to understand verifiability as a whole, and both like Earnifi or 3chain are highlighting different aspects of it.
It's like saying that verifiability is downstream of commitments, that these apps can make users make commitments. It's clear from the Uniswap example, I believe. I wonder what are the commitments that Earnifi makes to its users. Is it that they will get payday loans at a competitive interest rates?
Yeah, I think that would be, like reasonable there. The other, maybe on the 3chain side, that you get a fair, credit. I don't know if it's discount as far as rate based off of 3chain's risk, algorithm essentially. And maybe it's too almost in the weeds as far as how it's implemented. And instead, maybe the commitment is like a like undercollateralization at a fair market value. Maybe that's like the aspiration. AKA when you have anyone that can be a pool participant, and hopefully then the market is efficient. If anyone can like arbitrage some of these potential rates, as far as arbitrage being, I think that this person's actually more trustworthy, or more trustworthy, and I'll actually provide the loan. So I think there's it's like an interesting way to start viewing some of these applications, and I think verifiability is can be better understood through different use cases, but it kind of maybe just takes a handful of them to be able to have a light bulb moment.
There are two sides to it, right? There's a lender and there's a borrower. Maybe to the lender, the protocol is committing to not losing their funds. And if the borrower defaults or something, the protocol needs to cover it in some way.
That great point is that there's two sides of that market. Yeah. So there are different parts of the market that will have a different commitment made to them that hopefully makes it enticing enough for them to actually participate. So yeah, maybe we're starting to get a little bit closer to verifiability at scale, I think, with ZKTLS being one of these primitives that we can use. I feel like this does a pretty good job of highlighting broader discussion on maybe DeFi as a whole, but also the financial space and where verifiability that so happens to be through ZKTLS can be used.
I think DeFi space is at an excellent spot for taking advantage of some of these ZKTLS type primitives here. Hopefully we'll see more of those in the future.
Definitely. Yeah, I think this is maybe hopefully we'll start having more and more examples even beyond just the DeFi space to highlight soon.
All right, this concludes the volume 5 of ZK Idea Maze. If you enjoyed this episode, don't forget to give us a like and subscribe to the channel if you haven't already. Until next time.